Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're taking another look here at Bitcoin, seeing what's going on, of course, helping understand best practice and big picture. As per usual, we're going to look at some trends, some past patterns I've identified here recently, as well as, of course, just general consensus here on what's going to happen next. Now, big picture, I'm not a financial advisor. Please understand that. I love teaching people how to trade. Hope you can learn something here today. If you do want to become a better trader, I do have a trading academy where I teach you to trade. I send out signals for every single trade that I take. And of course, I have an amazing community. We have over 200 active members presently at this point. It's a really awesome experience. So thanks again to my current community members for being just an amazing part of my life. Greatly appreciate you. So taking a look here at Bitcoin. Here's something that is important to recognize, and we'll just jump right in to the big stuff here, or just the trends or the patterns that I feel are most relevant. And what I mean by that is, we've already identified that we're on a macro digression, so to speak, to the downside based on the overall sense that we're underneath the 20-day simple moving average and the 50 on the monthly. Okay, so simply put, we are in a position right now where the price is just overall making lower lows and effectively making lower highs as well, but obviously lower lows are yet to be seen due to the fact that we're kind of stuck in this range between 31,800 as low as 29,800. So we got this like $2,000 range that we're stuck in, and at this point we have a break below. So we'll talk about that and much more, but what I'm getting at here is that that's the overall sense. We're moving down. We have this recent ascending pattern that is looking like it wants to break based on the simple fact that today is a red day, big surprise of Friday, taking profits as per usual. So again, and what I want to show you here, and this is actually something I marked on the charts, is every yellow line here you see is a Friday. Okay, so you can see a correlation there. Always, unless you exclude this previous Friday here, 4 out of the last 5 Fridays have been red days. Now, I know that goes without saying, pretty obvious. We know that that's going to be an expectation. But what's interesting is every single weekend, we've seen green candles to follow. All right. So I'm not speculating or saying that the price will shoot straight up from here, but I can tell you that even though we have low volume on the weekends, they seem to be good green weekends. Okay. So again, red Friday followed by a green weekend. This seems to be a pretty common correlation here. We even had a green Saturday and Sunday here as well, following this Friday here. Okay, so again, generally speaking, we're looking to be in pretty good shape. So in that sense, we should expect the price to progress higher throughout the weekend, not necessarily lower. Another thing we can also understand too is I believe CPI data was released here today, or recently, very recent, and of course that does affect things as well. So please understand that a lot of little stuff does tend to add up, and today being a Friday plus the data coming out, there's no surprise that we have a red day here as well. I mean, good news is we were able to maximize our potential with some short positions, of course, but generally speaking, there is a long position for Bitcoin that still hasn't closed, at least on Bybit, if I'm not mistaken, and I think it's likely to still hit its target, and that should apply this weekend. Now again, I wouldn't expect a monstrous return this weekend, but we could very well see some increase from here, because even though we've been range bound for some time, we seem to have this simple rinse and repeat action where Fridays and Mondays are red, and of course Saturdays and Sundays are green. Okay, so pretty standard stuff. The average person like you and I are investing over the weekends after we've gotten paid on Fridays, and then the whales come in and just completely destroy all those gains because they want their profit, right? Again, it's a very unfortunate and cyclical pattern, but that's essentially what we're looking at there. So I just want to kind of bring that to your attention so you can generally understand that today is kind of par for the course, pretty standard, but also just note that I don't think we're going to see like a complete free fall from here. We have a lot of buying pressure. In fact, today's volume is higher than presently, and the candlestick hasn't even closed yet. We've got a good full trading day ahead of us than last Friday. So last Friday was very red, a lot of selling pressure. We've seen the same amount of selling pressure, but with the volume being the exact same as last Friday, that tells us there's more buying pressure too. In other words, the price isn't willing to go much lower. And what's interesting here as well, you can see it's been retested 4 times. Obviously, the more often you retest something, the more likely it is to break. But you can see a very strong support level here, right around 29,200, forming essentially because it's hit 1, 2, 3, 4 times, and really just kind of telling us that that's a level that the price is unwilling to go below, right? So as soon as the price comes in the low 29,000 range, then there's a lot of buying pressure at that point. All right. So again, eventually that could dissipate, and you could even argue that we were having a descending type of pattern here as well, which is accurate and very true. But that's kind of concurrent. It goes without saying. We've seen this happen for some time. In fact, let's go ahead and jump right in. If you can see the 50-day simple moving average, very synonymous with this descending trend line. It's also very synonymous in most ways with ascending trend lines too. So you need to recognize that the 50-day SMA is a really important thing that we need to acknowledge and respect. In other words, being under the 50, it's ideal to consider us to be still bearish in the overall sense of things than it would be to see a little rally and think that we're back on track. All right, so until we break back above this trend line here, this guy right here, we're not going to have a leg to stand on. All right, so there's that. Also note too that this ascending pattern that I drew out recently hasn't closed. I mean, today's candlestick hasn't closed yet, so technically it isn't broken, but it doesn't look like it wants to continue to ascend. So the pattern of higher lows that I was hoping that we'd continue to hold is no longer present, or at least soon to be no longer present. There's no guarantee, but if today our candlestick closes lower than where we're at presently, then obviously we're going to see that this candlestick will close at a lower point than the previous low, right? Because we want to have higher lows. That's an important part of progression to the upside. Well, this is kind of breaking that trend and kind of letting us know that, hey, we may not have that type of ascending pattern, or it's going to take longer to get there based on the fact that this trend line here is holding the price action down. All right, so just a handful of little things there. Let's take a look at some of the other standard stuff. We're going to go ahead and I'm going to spare you on the monthly and the weekly, just based on the simple fact that it's pretty straightforward. The price action is continuing to progress lower. We're below specific key level resistances, such as the simple moving averages, and the inverse as well. We're just above. So, again, worst case scenario, 22,000 would probably be the lowest point in which we'll see, which is where both moving averages are kind of telling us that we've seen some significant buying pressure in the past. That's also close to a previous high, and that is important to recognize. So take a look at, of course, the RSI. Price is coming down, or RSI is coming down, of course. That's pretty standard. Nothing really to extract there except that 50 on the RSI was a very strong resistance level, which is concurrent or synonymous with 31,800. So just bear in mind, 31,800 is a very strong resistance level. Also note too here on the 4-hour, we're below all three moving averages. That's disadvantageous, you could say, even though they've kind of averaged themselves out here based on the fact that the price was kind of squeezing itself into a little bit of a wedge. We're seeing this breakdown, so to speak, where the price is coming down and essentially just kind of losing that support. So again, it's not like the sky is falling per se, but that's definitely disadvantageous on the 4-hour. That does kind of tell us that there is potential for further downside. But also keep in mind, please understand this, we're going into a weekend. There's going to be a lot less whales buying and selling tonight and tomorrow. So we just got to kind of understand that while we could see a little bit lower of a price point today, I don't think it's very likely to see the price shoot straight down from here, unless that happens in today's trading day. So pay attention. Let's see what, when 5 o'clock Pacific Standard Time rolls around, when that candlestick closes, and we'll go ahead and find out more specifically what that looks like, okay? But for now, it is obviously moving down. We're below 50 on the RSI. We have a MACD. I guess you could say that's even a divergence. It didn't get a chance to converge. So ultimately, there's mostly bearish signs here on the 4-hour. Nothing really telling us that we're in good shape. Furthermore, we could also look here as well. We've gotten a lot of resets here recently, so there's really not a lot of continuation patterns that we can identify in the 4-hour. It tells us that we're getting overexhausted. We may see something like that on the 1-hour, which we are here. So take a look here. Of course, we're at a 9 on TD sequential. So again, in most cases, when you see a 9, the price will go sideways or it'll recover back to the other direction. So bear in mind, that doesn't guarantee anything. We could go sideways and then down further. That does happen. But again, I would say going sideways today for a little bit longer and then likely a slow climb over the weekend seems very probable. Okay, so if you're going to take a long position this weekend, obviously be very careful with that. But on the same accord, I think that you could have some success if you were to kind of go with the same patterns of behavior we've seen for the last 4 weeks straight. Red Fridays, green Saturday and Sunday. It's almost always happened. So again, I think out of the last 5 weekends, we've seen every single Saturday and Sunday be green. So it's just kind of a normal standard thing. So just be mindful of that. And don't be shocked when Monday comes around, we see a red Monday. It's pretty standard. Anyways, take a look here. Of course, TD sequential telling us we're in an exhaustive state. So we should experience either sideways action from here or an unlikelihood of the price going much lower, at least in the immediate future. So I would venture to guess that today, 29,200 was the lowest point which we'll see, and we'll probably see a slow progression up over the weekend. Taking a look at the cloud here, though, this is also a reason why you want to not take a long position yet. I would wait until the one-day candlestick closes today first, because we have the lagging span free and clear of price action. The conversion line is below the baseline, and we're obviously well below the cloud. So this is basically 3 out of 3 green lights for a short position. Not saying you want to take one now, it's a bit on the overextended side. But if you have one open, certainly wouldn't hurt to adjust your trailing stop loss a little bit lower to ensure that you stay where you're at. Of course, you don't lose your profits, but more importantly, take some profits while you can, because the likelihood of the price digressing lower than 29,200, just again, based on the overall sentiment and everything we've talked about so far, seems pretty low. Again, I've seen stranger things happen, but since we're at an exhaustive state here on TD sequential, so to speak, the likelihood, once again, of a free fall from here is pretty low. I do think the bottom is in tentatively for the day. It's just kind of what it looks like and feels like. Again, could be totally wrong. There are some other fundamental catalysts that could impact this. CPI data is one of them, so just bear in mind, this is not great. Of course, we have lower lows, and we're still making lower highs. Right? So until we change that on the 1 hour, we're not going to see that translate into the 4 hour. We're not going to see that 4 hour translate to the 1 day. So again, they're all kind of reliant on each other here, but if you see lower lows and lower highs in the 1 hour, then you can expect the 4 hour to kind of follow suit shortly after. And right now, the 4 hour is not telling us we have any fantastic signals to go long. Okay, so I would say, take a long position with extreme prejudice and make sure you don't just arbitrarily jump in because it seems like it's a low price. Dollar cost average, by all means, for sure. This is a great place to add to your position. I mean, I love the 29 to 30,000 range. I think it's awesome because 5 to 10 years from now, we're gonna be wishing we had got in at 30,000. It's just one of those things. Either way, I hope that you learned something here today. Enough going in circles. So just again, be cautious and careful. I would say expect a green weekend, considering the last 5 weekends have been green, and just always expect a red Friday. It just seems to be the ways in which it's working right now. Now that doesn't always work, in big picture when we're in like a bullish uptrend. Fridays and Mondays have kind of almost an inverse reaction. Like they'll be green on Fridays and Mondays, and then red on the weekends. It's kind of a strange scenario. So again, with where we're at right now, just know that hey, 4 out of the last 5 weekends or Fridays have been red, and 5 out of the last 5 Saturday and Sundays have been green. So if I was a betting man, I would anticipate this weekend being green. Again, not going to be a solid, super strong slammer of a weekend. Weekends are always low volume. Okay, but just bear in mind that the trends right now are kind of telling us a handful of different things, minus the fact that we're stuck in the suck, right? So either way, thanks again so much for your support. Appreciate you joining me here. Obviously, comment below if you have any questions or concerns. More importantly, just let me know how you feel. I love to hear your feedback. Greatly appreciate that. And if you're not currently a community member, CryptoCache.tech is the website. Link in the description below. I look forward to working with you. Hope you have a great rest of your day. Oh, one last thing. I do offer discounts for military in third world countries. Be sure to message me if you have any questions. Only use the comments section for my contact information. I will never directly message you first, okay? I'll respond to you, but I will not direct message you. And I don't have a WhatsApp account, or WhatsApp, I don't even know what it is. There's a lot of trolls in the comments below, so let's take the power back and tell them a thing or two. All right, anyways, thanks again. We'll see you next one. Take care.